And now for a special address, Empowerment of Financial Markets, Bharat, I'd like to call on stage Mr. Samir Shah. Mr. Samir Shah joined Dvara Holdings in February 2018 as Executive Vice Chair to take on responsibility for the strategic direction of the Dwara's trust mission of financial inclusion and portfolio management of group of companies. He has over 2 decades of experience in building institutions and market infrastructure. Prior to joining Dvara Holdings, he was the Managing Director and CEO of NCDEX, India's largest agri-focused commodities exchange. During his tenure, the exchange had transformational impact on India's agri-economy through various technology and digital initiatives. Prior to this, he worked at global information company Thomson Reuters for 17 years, where he held various capacities. Mr. Samir began his career as an investment banker in Mumbai, helping companies unlock value through public offerings and buyout deals. Ladies and gentlemen, please welcome Mr. Samir Shah.
Good afternoon, everyone. I'll just wait for my presentation to be up. Okay. Good afternoon, everyone. My name is Samir Shah. It's a pleasure to be back associated with this community, and I'd like to thank Maulik and Bijur for giving me this opportunity. I used to be a very much integral part of this community many years ago, up until almost 2009, I would say, when I was on the sort of the technology supply side to all the participants who are seated in this room. So I've seen a lot of these developments up until that point in time. And at that point in time, in 2009, approximately 2011, I took a slight shift in my career to start to work on, trying to put all the learnings that I had about financial markets, OTC markets, exchange-traded markets, risk management, into trying to make them work at the last mile, which is very challenging and very interesting and very exciting. So I'm going to basically, and that's basically what I've been doing over the last, since 2011, trying to make markets work in my own small way at the last mile. I had the opportunity at NCDX when I was there, which is India's largest agri exchange, to launch an exchange-traded options product for agricultural commodities. And obviously, agricultural commodities are an extremely sensitive part of India's economy because they touch farmers, they touch consumers, when food prices go up, and so on and so forth. So it's a political hot potato. But to be involved with SEBI to design a options product, an exchange-traded options product for agricultural commodities was actually quite a phenomenal experience. And it's still in early days, and like many things in India, once you get started, you iterate over a period of time, and over a period of time, these markets become extremely strong. I also had the opportunity at NCDX to launch India's first dematerialized warehouse receipt as a product. And for those of you who might remember, we had a scam in India which involved warehouse receipts, where goods didn't exist in warehouses, but warehouse receipts were offered and financed and refinanced. And unfortunately, in India, we often, a spate of regulations do come on the back of scams. That's how we learn, and that's how we move forward. So that's been a real passion, and in the last 5 years, I've been sort of taking that journey forward to go towards, bringing some of those really sort of core institutional processes, products, mechanisms to the last mile, where consumers in India are still deprived of accessing just basic services. So I'll start my, have 15-20 minutes to cover. I'll start by giving a quick sort of run through my own experience. A lot of this data may not be very unfamiliar to all of you, but I'll just, just as a headline, start with some of the backdrop. India has come a long way as far as financial inclusion is concerned, but it is like a glass half full, depending on how you look at it, glass half empty, glass half full. We've come a long way. We've got still a very long way to go as far as making financial markets work for the last mile. So we've had, through the Jan Dhan Yojana, which the government has launched for a long time now, we've had a very, very strong penetration of bank accounts in India. But even after this extremely aggressive, ambitious rollout of the bank account program in India, the usage of bank accounts is still extremely low. We have a fairly significant inactive bank accounts in India. So there is a very, very large, so we may sit in this room and talk about exotic derivatives on one side, but the most basic of basic financial product that is in the country today remains unused by a variety of population. So I think the challenge on us is to use our institutional memory, our intellectual capital, and our regulatory processes to really sort of start to plug away at these problems at a much more ambitious level, at a much more faster pace. Savings is another sort of horizon, another battle that is still not solved, not won. We have less than 25% of Indians even today save through formal channels. So while bank account as the first building block continues to be a challenge, as you go up the building blocks in the banking system, savings continues to be a challenge. I think have made a huge amount of inroads over the last 10 to 15 years on two parts of financial inclusion. One is credit, and second is payments. UPI, of course, has brought about a transformational effect on the payments ecosystem, and credit through microfinance, small finance banks, the regulatory guidelines that have come over the last so many years have increased penetration of credit. But credit can't solve problems in financial inclusion on its own. In fact, if you use credit as a tool to solve every problem of financial inclusion, you will have an over-leveraged society. And we've seen that time and again. The Andhra crisis was an example of how excessive reliance on credit to solve financial inclusion can create a huge problem. We recently had the Assam crisis as well, a couple of years ago. So we know that on its own, credit can't solve the problem. On its own, payments can't solve the problem. You've got to focus on, it is a four-legged stool, not a tripod. It's a four-legged stool, which is credit, payments, insurance, and savings. And I clubbed sort of pension with insurance sort of as one bucket. So the two missing pieces need to be looked at are savings and insurance plus pension. So these are sort of unsolved problems in the financial markets today, and we need to solve them, while even the first two, which is payments, accounts, still is a glass half full. The other horizon that continues to remain unsolved is the gender gap in financial inclusion, which is a very, very, very big problem, and that needs to be also under a significant amount of focus. Digital payments, we've talked about the huge success of UPI. We still have a very, very big challenge ahead of us and an opportunity. I like to look at it as an opportunity, which is to try and take our digital payments infrastructure to the last mile. Very exciting announcement over the last 10 days or so, where the pilots for e-Rupee, the central bank CBDC for retail, has now been launched and started pilot work within 4 banks. With a combination of UPI, e-Rupee, I think we are a country that's really making leaps and bounds in the digital payment infrastructure. But I think the real focus has got to be to take digital payments to the section of society that doesn't have access to digital payments today. Otherwise, what is happening is that the population that uses digital payments, between 25 to 35% of the population which uses UPI today, is using it more and more. The remaining 65-70% is still excluded, vastly excluded from this infrastructure. And I think the priority needs to be to create institutions, to create innovation in bringing digital payments to this community. Debt And sort of assets, Indian households primarily rely on physical assets still. It has changed. However, even today, the proportion of financial assets versus physical assets in a typical Indian household continues to be very skewed towards physical assets. So for all of us in this room today, the opportunity is to really enlarge, be it broking, be it capital markets products, be it banking products. It's to bring this to an average normal Indian household, which is still heavily invested in physical assets. And it is only when that shift of physical assets to financial assets starts to get a significant amount of momentum is when the real economy at a grassroots level will start to move, and the ship will start to move in a very significant manner. I'm going to skip some of these, but just to let you know that the fact that financial inclusion has got a long way to go is not just a thing about numbers. It's not just about exclusion of a certain percentage of population. It's also mental. It's also perceptions. A large portion of India still does not feel, the underlying theme from this slide is that a large portion of India still doesn't feel safe and secure for being able to manage their household finances in the moment of crisis. So if you leave the actual metrics aside, but just look at mental sort of perceptions of a typical Indian household, you will find that a normal Indian household does not feel that they have the safety net to deal with financial challenges. So what I'm going to spend for the next 10 minutes or so, 15 minutes or so is I've talked about where how far we have come. We have come a long way. We have still an extremely, daunting and ambitious program and roadmap ahead of us in terms of making markets work, making banking work, making capital markets work at the last mile. So what might some of these examples be? Right? I mean, I'm just going to sort of paint some of these. Many of us may be familiar, but I'm just going to sort of piece it together to give a sense for what might be some of the solutions and some of the design challenges, some of the infrastructure challenges that we should start to think about over the next 2 to 3 years to really make it work at the last mile. RBI has basically been talking about cash in, cash out points, CICO, cash in, cash out points at the last mile. RBI has been talking about having a certain sort of, for every 5 to 7 kilometer distance, there must be a cash in, cash out point. So we talk about fintechs, and we've talked about the explosion in fintechs, and we've talked about, there has been a recent game-changing guideline from the Reserve Bank of India in October, which is digital lending guidelines. A version 1 of a guideline for the first time, where the central bank has come out with a set of rules, guidelines to play, where fintechs can start to sort of operate in a more structured framework. Those guidelines obviously have a long way to go, and I'm sure, like many things in India, they will, over a period of time, become better and better and better. But the opportunity really is to take fintech to rural. That's really the opportunity. Rural India today is an aspirational household. It's an ambitious household. It is a lot more financially able as compared to 10 years ago. Agricultural incomes, despite the crisis, have actually made rural India a lot more, I wouldn't say prosperous, but a lot more capital in their hands. The balance sheets of rural households are in much better position as compared to 10 years ago. So this is the time where the combination of UPI, technology, the aspirations of rural households and their more capable balance sheets today means that there is an opportunity for fintechs to start to take their business models to go to rural. And this is an example of a lady who's basically experienced, she is in charge of a cash in, cash out agency in deep Tamil Nadu. And she has gone from being perceived as a simple woman running a shop to a banker in her village. Her profile and her reputation and her brand in that village has gone up significantly ever since she started to offer cash in, cash out services through a BC outlet in a village. We have 6 lakh villages in the country. Can we get a BC point at each of those villages in the country? In the country, that is really the the transformative effect of finance that we should be able to we should sort of think about bringing and empower people like her to become sort of bankers to that village and bring banking services at the doorstep of a village. That's when real transformation will happen in real Bharat. That's the theme of my address, and a large part of this conference about sustainability and stability in the financial system will come when financial services are much more broad-based from a consumption perspective. Credit scores for new to credit customers. Even today, so this is an example of a farmer in Odisha. And this farmer has been now taking small credit. He's a small and marginal farmer, taking credit which is now being designed using artificial intelligence and remote sensing. A new surrogate credit score has been built that allows this thin file, new to credit customer who doesn't have a bureau record, and hence most banks, NBFCs, small finance banks will be typically reluctant to offer credit to this customer because there is no bureau record for this customer, can now start to access and avail credit through surrogate credit scores that are using a combination of credit, using a combination of technology, which is satellite images, using combination of machine learning to build surrogate credit scores that are realistic, not based on some black box 200 parameters that go into an algorithm, but real farm level credit scores that can be used by banks to now start lend to these farmers. Our experience has been to work with small farmers is that 70% of the farmers that we've worked with today, even today, are new to credit. Right? So we talk about excessive credit on one place. In some cases, we talk about 70% of small and marginal farmers in the country. And if you go to tenant farmers, the ratio is even higher, because a typical KCC product, which is the flagship product of banks in India, still requires a land holding farmer to be eligible for KCC. So the tenant farmer population is still significantly excluded. So how can we all put our own sort of intellectual firepower together to bring about access to credit to these marginalized communities in a much more significant way, to take advantage of tech and some of the sort of infrastructure through UPI and so on and so forth that is getting built very excitingly in the country. And what we are seeing, this just the graph in the earlier slide which shows delinquency. Contrary to public understanding, the delinquency ratio for this cohort of farmers, small farmers that we saw, was less than 1%. This is a very exciting development. If a small farmer that is 70% new to credit can demonstrate less than 1% delinquency, it is an extremely attractive customer segment to pursue for any participant in financial markets. This is savings. This is a product which is, in my opinion, gold as an asset class is a super asset class. We have superfoods that we talk about. I want to start to talk about gold as a super asset class, and I know that classical economists and regulators have mixed feelings about gold as an asset class, whether it should be encouraged given our dependence on imports and so on and so forth. But if you look at a low-income household in the country, gold is a super asset class for this low-income household. And the supply side of gold is extremely broken. So the need for that household in the way they use gold for managing their household emergencies, for asset creation, for liquidity purposes, as a social status symbol is incredible. It outweighs, it outclasses a bank deposit in the kind of liquidity it has, in the kind of flexibility it has, but yet the supply side is still dependent on pawnbrokers. The regulator perception, the economist perception of gold is still something that we shouldn't be encouraging. It is still perceived as a passive, asset class and should not be something that. But if you look at the consumer is an extremely this consumer is an extremely savvy consumer with gold as an asset class. So I would like us to reimagine whether there is a need to create a gold bank or gold fintechs or create products and services. Recently, SEBI has launched a very exciting product which is called as the electronic gold receipts. I'm personally very excited about that product because I think, and it has a low denomination of 1 gram. There could be innovation that can bring that denomination down even to below 1 gram. And I do think that it has the opportunity to convert gold and rewire the supply chain of gold, change the perception of gold amongst policymakers and regulators, and to give a product that consumers really like, understand, can use without sort of fear of mis-selling and so on and so forth, because a lady of a rural household today understands gold like nobody else. And this is an asset class that she feels comfortable with. So I'm just trying to throw up some questions and some possibilities for the future in terms of making markets better work for Bharat. Rural insurance. Insurance is, if you look at cattle insurance, 4% of, there are 400 million cattle in the country. Less than 4% of cattle are insured. 1 out of every 3 rural households has backyard cattle in their house. Between 1 to 3 cows, some buffaloes, some chicken, etc., etc. It is like a rural ATM. Breeding cattle at home is like an anytime money for a rural household. Yet, insurance penetration is very, very poor. If insurance penetration is poor, credit penetration automatically is poor, because if the cattle is uninsured, the banker is obviously going to be very reluctant to lend to a farmer whose cattle is uninsured. So it has a knock-on effect. So under insurance is under credit penetration, and so on and so forth. But now you have good technology that can allow us to take insurance to rural India, to have cattle insurance that is designed. So there is a company that I'm associated with which has created an Aadhaar equivalent for cattle. The nose of the cow is like the fingerprint of human beings. Which means that it is a unique identity for the cow. So using AI, you can actually create a Pashu Aadhaar, and that unlocks suddenly a huge population of cattle to create insurance. And if you can insure 100% of cattle in India, you can then offer credit to 100% of small and marginal cattle farmers in the country. Again, just small examples, but huge numbers that can be really empowered to enter the mainstream of financial markets and banking industry through just being very, very commercially smart. None of this is social service. These are all good customers. Less than 1% delinquency could give very decent yield. And just if we can be a bit more imaginative in our product design suitability, we can take these markets to this customer segment. Yes, I'm about to wrap up. This is going back to the first point I made, which is revisiting the account experience to customers. We think we have solved the problem of a bank account to customers. We haven't. Even today, when I talk to even urban customers, you walk into a Uber enrollment center where a young driver wanting to be a part of Uber platform walks into an Uber enrollment center. 6 out of 10 Uber aspirational Uber drivers will get turned away by an Uber enrollment center because they will not have a functional bank account at the time of enrollment. And Uber will make payments only into the bank account of this driver. This is urban India. This is not even rural India. 6 out of 10 Uber partners don't have a functioning bank account, right? So we haven't solved the problem of a bank account. We need to think about solving the problem of a bank account much more aggressively. Great moves have been made through setting up of payment banks. It's a great move by having a differentiated banking architecture in the form of payment banks. They are beginning to do well. We need to continue that path of, even staying focused on solving basic problems of even making a bank account accessible, usable, functioning to the consumers of Bharat. Evidence, this is a very famous economist, ex-Yale, Rohini Pandey. She's spent a lifetime in studying financial inclusion around the world and in India. And she's proven, so this is the prize. The prize is that if we focus on making financial markets work for Bharat, we can actually directly impact poverty and remove and eliminate poverty in the country. So it is not just about, as I keep saying, this is not just a social good. It is obviously a social good and a national imperative, but it makes tremendous commercial sense, and from an economic perspective has the tremendous empowering ability to remove and eliminate poverty from the country. So I'll end there with my again, the United Nations Social Development, Sustainability Development Goals also put a lot of emphasis on financial inclusion. Out of the 19 or 20 SDG goals, anyway, the slide's not coming up, but out of the 19 or 20 SDG goals, about 13 SDG goals appeal directly to financial inclusion. So people in this room, we have the power to influence a significant amount of, sort of the global focus on SDG. We are the host this year, starting next year for G20 as a country, and financial inclusion is going to be a big work stream under G20 presidency, and this is going to be under a big spotlight. So I do want to leave this audience with a message that I think this community has a tremendous opportunity and a responsibility to make finance work for Bharat. So I'll leave it there, and thank you once again for the opportunity.
Thank you so much, Mr. Shah. I'd like to invite Mr. Sunil Patwari from Nagrika to please come up on stage and present the memento. Can we have Mr. Utkarsh Patwari to please come up on stage?